And stay down.
Hey.
Consolidation right where Bitcoin price is right now, and then price drops all the way down to $70,000 by the end of March. However, if we have what we saw in 2017, where price was consolidation, and then the bottom fell through, price went from $6,000 to $3,000, and then all the way back up. Well, it's a lot smaller here, but that would have us at right up here, around 108,000 by March. Now, I already threw my hat in the ring saying 108 by March, so we all know which direction it's going already. Right before Bitcoin did dump, we had record tightness in the Bollinger Bands. The Bollinger Bands had only been tight twice before in history. One time was the kind of the beginning of the bull run back in August of 2023. The other was that exact moment when Bitcoin price tanked from $6,000 to $3,000 back in 2018. So, are we going down? Are we going up? Well, we went down initially, but when will we continue going up? We have some bulls, people who call themselves the bull, becoming very bearish right now. If we take a look at the monthly Bitcoin RSI breaking through a trend line that has marked the top of every single cycle. Now, if that is true, I would just be confused because this would be the first ever cycle where the pi cycle top is not only wrong, but the most wrong it's ever been. This is the widest it's ever been post-halving at like 70-some%. Well, could it be that terribly wrong this time? Or do we just need to be a little bit more patient and maybe this is just a false flag? We also have a bearish engulfing candle for February. Yes, February was one of the worst, actually the worst February in history for Bitcoin. And if $78,000 is not the bottom, it looks like Bitcoin is going to tag the monthly parabolic SAR, which generally means that, changes the direction of the market from going up to going down. Now, is it about to go up? Is this 6% today good? Well, I think there might still be some more shaking the trees. You can see right here, 100x longs already jumping in. After the price comes down, already in there. Well, once they get liquidated again and again and again, and nobody's willing to jump in long with anybody else's money, that's when the market will probably go back up. We can see here that Bitcoin spot volume was highly active around $100,000. Now let's take a look at the other times when it was active. It was active back here at the last peak back in early 2024. But before that, the last time was like the first peak in 2021. This was pretty much the top. So does that mean that this is pretty much the top? Or could we have longer to go? Well, Key Young Ju says Bitcoin on-chain indicators are at the bull-bear boundary. It's confusing because basically we don't know if it's bullish or bearish right now. It's at the boundary. He expects this to be the longest bull run in history, but could it be wrong? We need at least another month of data to confirm whether we're entering a bear market. If demand doesn't recover, indicators may fully signal a downtrend. Now, based on a typical 2-year cycle, the bull market should last until April 2025, which is earlier than some people expect for sure. And the next month or two will be a key turning point for the Bitcoin market. If every indicator confirms a downtrend, we'll admit he was wrong. But as he said earlier, he thinks the chances of dropping below 77,000 are low. Even in the worst case, he sees a high probability of consolidating around 77,000 for a few months before moving back up. Don't think going heavy on leveraged directional bets long or short is a good move right now. But you know who doesn't care? Yeah, there's 100x BGen longs. And I mean, what he says right here is interesting. He expects this to be the longest bull run in history, and that is confirmed by the pi cycle top. It's never been wrong before. The wider apart it is, the longer until it crosses. We've already had a pretty long bull run, but this suggests we should continue to have an even longer bull run. Now, that being said, there are some indicators that suggest Bitcoin could be headed up in the short to near term, maybe in about 10 weeks or so, 2.5 months. What's that? Something like that. How are we feeling about this chart of the M2 money supply in correlation with Bitcoin 10 weeks ahead? If you take a look, Bitcoin is here is in red, the M2 money supply is in black. they correlate pretty well. And as money flows in, guess where it flows? Into Bitcoin. Well, guess what? M2 has already taken off. Bitcoin has yet to take off. Maybe another couple of months it'll start to recover. And TechDev posting this, saying that, hey, the global business cycle looking similar to what we've seen previously, each gap getting longer. But we have tagged this bottom line that is the launch point. Touchdown. Oh boy, things are about to get crazy, because if this is industry consolidation between $90,000 and $105,000, what we've been seeing for the past couple of months, similar to what we saw back here in early 2024, well, that would suggest the next target for Bitcoin, $120,000 to $160,000. So that's all for this. Instead of his time, contributing this to labs and thinking about those themes, and creating content around them, and helping other big traditional hedge funds go and figure out how to keep account of Bitcoin. Traces down, and we talk about everything from the traditional economy to the national debt and monetary. Balance, especially this PC data was aligning with expectations like that. So this was mainly a technical movement too for some kind of balance. That's what the market saw so far. But the question is, will this balance last? Will SPY continue to rally to all-time highs, or is this a suggestion of a temporary push before we see more volatility, possibly another dip move? I believe that it's possible we go a little bit higher, but then I think there's going to be a lot of moments of volatility, just like we saw over here. Trump's tariffs and factors like this. So speaking about Trump's tariffs and factors like that, just a second. One more thing, just know that the market got a very beautiful balance. We saw big tech in the green, finance, health technology, everything was bouncing. Nvidia, Apple, Microsoft, Google, Meta, Amazon, Tesla, even Tesla's on nice green gain. That's the first time in a while we were due for this. Finally, the market got that balance. This is also a good way for the market makers to use shorts with all the what's expiring at the 2.60 ratio. Specifically for today. So what's happening with Trump's tariffs? Okay, I want to clarify a lot of confusion about them. There's a lot of confusion about the dates. I'm going to make everything very clear in this video. So on February 26th, Donald Trump said he's going to delay the Mexican and Canadian tariffs to April 2nd. So a lot of people may still be thinking that's the case, but that is not anymore. Because a day later, yesterday, February 27th, Donald Trump actually said that he changed his mind and the tariffs are going to be going into effect on March 4th. So that's the latest thing that Donald Trump said. On March 4th, the next week, on Tuesday, he has more tariffs on Canada, Mexico, and even on China. So let's make that very, very clear. That's what Donald Trump is doing. The tariffs that take effect are going to be imposing 25% tariffs on all goods from both countries. Some exceptions here and there, aside from like a Canadian crude oil, maybe natural gas, which only have a 10% tax. Keep that in mind. Donald Trump made that very, very clear. So that's what's going to be very, very big for next week. It's going to be tariff week. March 4th is when they should be implementing them. We'll see if this causes some downside for the markets. We'll get a little tip if that's the case. So these tariffs may cause a little bit of fear here and there about prices, but how it's going to affect our GDP. Just two countries, right? Canada and Mexico are going to be two of them. But Donald Trump also posted something on his Truth account. So right over here yesterday, it came out last night that Donald Trump, I'm sorry, I don't think it says right here. I think right here is what I'm looking for. Donald Trump said on his Truth Social post right here that he's also going to be implementing an additional 10% tariffs on China going into effect on March 4th. So he's saying that on March 4th, right, on Tuesday, we have Canada and Mexico seeing 25% tariffs and an additional 10% tariffs on China. So that's very, very big news. Make sure you guys are ready for this. It may cause a lot of volatility. What I'm looking at, these tariffs are going to be affecting agricultural machinery, cars, pickups, crude oil, and a bunch of other items. So make sure you guys are ready for this. And then we have this news right here. Donald Trump also announced that he wants to impose 25% tariffs on steel and aluminum as soon as March 12th. So a week after next Tuesday or next Wednesday, the Wednesday that's coming up, a week after the market we're supposed to have even more tariffs coming out. That's going to be very big for the markets. I think there's going to be a lot of volatility. So maybe the market tries to rebound a little bit, then we might see another rug. Maybe it bounces again. Easy, guys. So make sure you guys are ready for this. Be safe. Then Donald Trump has announced second means that
Get out. Off the bed.
U.S. promise. So that's what he's trying to do. That's very, very big news that's come out. I think Donald Trump's saying to say this as very, very huge as possible. So very tips that we also have Donald Trump huge announcements.
Come on.
He's going to be implementing a recent tariff across the EU. He also announced that it's coming very, very soon. We don't know the specific date, but very soon that's going to be the case. He also wants to put tariffs on cars, pharmaceuticals, semiconductors, and then certain commodities such as like copper. That is big news. So this is like the timeline of Donald Trump's tariffs. The main thing is going to be March 4th for now. Just a couple of days away. We have Canada, Mexico, potentially even China. We'll see if Donald Trump if he delays these or not. So far, it looks like he does not want to do that. That's what he said. That's right now. He's recording this. He does not want to delay them. He wants to do it on March 4th. Okay, so that's my clarification. That's out there. As far as the EU tariffs go, I still want to talk about how this is going to be affected. Capital appliances, electrical equipment, vehicles, aircraft, different kinds of instruments. Not to mention lots of food products, wines, liquors, beer, dairy products, and this goes on. It's going to be affecting a lot of different products. And then we have Donald Trump's tweets where he talks about the Chinese tariffs. How we're going to next week is tariff week. Okay, we might try to push higher, but there might be another rug pull again. We might see another big dip if Donald Trump does pose these tariffs. I want to be very careful about that. I can't promise anything as well. It's a little bit tricky to predict this because this is a very unique environment we're in, and it's being a very much just like. So, could we go higher? I think we might try to push a little higher if we can break 594. But then there might be another rug pull. The higher we go, there might be another move back down towards like the 580s. And then on top of that, most expect this is going to be earnings. Earnings are not that serious for the week. We just have a couple of them, lots of retail, Target, Best Buy on Tuesday. On Wednesday, we have Foot Locker and a Foot Locker. Thursday, we have like JD, that's what you Costco and many others. That's pretty much it. So please keep that in mind. For the economic calendar, you can realize that on Monday, we have the ISM manufacturing numbers coming out. That's going to be very important for us. On Tuesday, we have very, very minor data coming out. The ISM services data that's coming in that's going to be very important. On Thursday, there's not really much data coming out. We just have like a couple of Fed speakers. And for Friday, we just have non-farm payrolls. So there's a lot of data on Monday, Tuesday, and Friday. That's also going to cause more volatility. And then the market's at extreme fear. Typically, we're at extreme fear. We try to balance it a little bit, so there could be some more upside coming. See for subside just a little bit. I think we are too for that. There might be a little bit of a bounce still coming to the markets, maybe on Monday. But even if we try to go hard, it's not hold with 5 to 4 million for the time to buy. That's what we're pushing. 5 back to 5. Then down to 80% change. It's like we go a little higher, we get another dump, we try to push up like this, and then we see like a move like this. That's like a hypothetical possibility, right? I can't make any promises for now. I do think we try to go a little bit higher, then we'll see if we get a rejection with the tariffs coming out. So please keep that in mind. I'm anticipating a lot of volatility. That's what I'm seeing for now. It's by temporarily a little bit bullish, but there could be another rug pull move. For the QQQ, very similar setup. As long as we're above 506, we could attempt to get up to 510 and 513. There could be a little more upside. We'll see if facility. That's going to be very, very key for the way we end up moving. But let's see if we can make an upside move. For the Russell 2000, we're looking at 215 as our resistance on 217. We'll see if we can form an inverse head shoulders or rejection or not from here. I do think we go a little bit higher for that 215 area. See what kind of move we end up making. For ES, we're looking for 5950 is our main supports. We have to hold this. If we do hold this, we're looking for that 10 for 6,000. We could try to move as practice resistance. So be very, very careful. We're back in this lower channel, at least for ES.
Remember how we were talking about how we had these channels, so we're trying to get a breakout. We broke back into it, now we're trying to bounce. We'll see if we hit this upper resistance and we reject here. I'll be watching that going into next week. For MQ, I think we go a little bit higher. I'm looking for a test of 21,000. If we break that, I'm looking for 21,350. Then we'll see if we reject off those levels, so just watch it very closely. For Bitcoin, we're on a bit of a downtrend here. We're looking for the support right here at 82,500. So we'll see if we dip and then bounce. We'll give this some time. For Nvidia, I think this goes a little bit higher. I think we're trying to get back to this resistance right here. Now, it's going to be around 126 area. I think we go a bit higher, and then we'll see how. So it might continue to make trend, trying to get back to about 234. We'll see if we reject. For AMD, we're technically on a downtrend. We'll see if we bounce back up to 104. So keep that in mind. Has resistance at 220. We'll see if that breaks or not. But I think we push a little bit higher. We'll see what kind of reaction we get. For Amazon is looking at resistance at 213.8. If that breaks, we're looking for essentially 216. We're making lower highs right here, so watch this very, very closely. We're making lower highs and lower lows. If we break past 671.64, this could go a little higher. If we lose 658, we're going to be tipping lower. So I think this could go a little higher, and we'll see how this ends up going. Microsoft is trying to balance for 399 to 400. We'll see how it reacts. We have our 20 EMA as resistance. If it breaks us, we're going to 405. But I think 400 is going for a small push. We're not looking that strong. I could see a small push for this resistance becoming, this support becoming resistance around 174. And then it's all just a matter of how we end up reacting. So I think the market goes a little bit higher. I think we have a little bit more potential to go a bit higher. But I'm not a permeable. I don't think we're just going to rally to all the time. Excuse me. I think that there's going to be a lot of volatility still coming with Donald Trump's tariffs, and we have to be very, very patient with what Donald Trump is going to be announcing. So get ready, guys. This tariffs may cause a lot of volatility alongside the data that's coming out. So be careful. Yep. Could we go higher? Yes, but we have to be very patient with this one. I also want to note that it's very tricky to predict what this market is going to do on a day-to-day basis. It's getting trickier because of so much volatility right now. So, for those out there who are lost, if you're taking losses, if you're scared, I would recommend to just size down and stay in the sidelines and wait. Because sometimes when you're day trading, there could be days where you just don't even enter trades because you don't see a good entry, or if you're uncertain, sometimes that can happen. That can actually save you from a lot of losses. Financial advice, I'm just trying to put that out there. Be careful, guys. I'm here to support you. I'm here for you guys no matter what. And I just want to say that I wish you all the best for the weekend. I'll try to upload another video tomorrow. I might have a surprise for you guys if you guys watch my video tomorrow. That's coming out. Until then, have a good rest of your weekend. Passive investing, dependable returns, and diversification. The drawbacks are you cannot outperform the lack of flexibility and tracking errors. So I hope you enjoyed that educational information, but I want to share what's in my opinion as well. So I'm going to speak freely. This is a heart-to-heart about index fund investing. So if you're going to ask me for my opinion about index fund investing, I believe that it depends on the investor. It depends on the individual person. But for most people, for most investors, I believe that index fund investing does make sense. There are more benefits than there would be cons or negatives, because just think about how practical it is. Think about how convenient it is. You could just throw money into an index fund, and you don't even have to know what's going on. You don't have to manage it. You can just focus on your job, your career, your friends, your family. You could focus your energy and your attention elsewhere. It'll be more stress-free. You don't have to make these big decisions. You don't have to keep up to date on the macroeconomic environment or company-specific news. So there's a lot of benefits that you have to take into consideration. So sure, the trade-off would be that you're not going to be the next Warren Buffett. So you need to ask yourself those types of questions and be honest with yourself. Are you trying to be the next Warren Buffett? Because if you are, then index fund investing is probably not for you. It's not a good fit for you. Not with the goals that you're trying to achieve. But if you're trying to find a place where you can park your money, excess cash as an investment, and you can do it passively, just check up on it passively, inconveniently, then index fund investing might be a really good fit for you. But I do want to say this last part, and this is especially important to beginners, because
when people are talking about index funds, they usually think about a very broad index. Let's just say the S&P 500, right?
Huh?
However, you can use index funds, targeted index funds, to complement yourself as an investor, as an active investor. So, for example, if I'm going to be actively participating in the stock market, like I'm going to be looking at stocks every day, and not necessarily buying or selling every day, but I'm staying up to date as an active investor in the stock markets, and I'm buying stocks in all different types of sectors, but I feel like that I'm lacking exposure in, let's just say, pharmaceutical stocks. Okay. If that's the case, then I could use index funds, a targeted index fund like that specializes just in pharmaceutical stocks, to complement my overall investing style. And the other approach is that portfolio will revolve around index funds investing.
After last month, massive solar flare added a 20th hour to the day. Businesses wondering what should we do.
Anything can change the world. The answer is yes. Index funds were introduced in 1976. Investing in index funds is the most common form of passive investing. It is estimated that passive investing in the stock market makes up about 15% of the markets. That's the official stat. Some estimates are that it's over 30%. So yes, it's very common, very popular, so this is nothing new. Another good question is, how do you invest in index funds? Okay, so it's very easy. You will need a brokerage account or a retirement account. You pick the index that you want the buy shares of that index fund. So it'll be very straightforward. Another very good question is, how much money do you need to invest in index funds? Most index funds have no minimum requirements, so it can be a great way to get started with very little money. And I'll answer this last question. How many index funds should you own? So that's going to depend on how diversified a particular index fund is. If you invest in a well-diversified fund, then you may only need to own one index fund or two index funds. However, if you invest in an index fund that's more targeted, then you may need to own more than one or two in order to create diversification. Now, it's very important that you understand this. There is no one right way to invest in the stock market. You can successfully pick your own stocks, invest in index funds, invest in ETFs. I recommend that you choose what's best for you. And to make that determination, it's important that you understand the differences between the three: stock picking, index funds, and ETFs. So personally, the stock market, I do all three. I invest in index funds, I invest in ETFs, and I pick my own stocks. Now, in this section, you will get a better understanding on whether one or two or all three are a good fit for you. I'm going to answer for you, how are index funds and ETFs similar? How are they different? And how do you know which one is right for you? Okay, so I'm going to tell you the truth. The truth is that they have more in common than not. They have more similarities than differences. But I want you to be aware of the differences that could make an ETF or an index fund a deal breaker for you. I'm going to demonstrate to you what is going on with an index fund. So you can think of it like this. Let's say end of 2024. You, me, my brother, your neighbor.
I'm Afro-Latina at this point.
You're okay. What type? Puerto Rican, Dominican?
Black skin.
Sure. Okay.
Jamie, pull that video up. Mr. Blake, you're charged with possession of marijuana. You're going to do probable cause. You have the right to remain silent. Defendant, unauthorized crossing point from convenience store to target complex. Wait, he did what? He crossed an unauthorized crossing point, so I guess he crossed the street. Is he jaywalking? Yeah. Yes, Your Honor. Criminal black. A PC search was conducted, and the officer observed a large sack of marijuana. I don't think so. Criminal black. I don't think so. I'm going to find no probable cause. Mr. Blake, be careful, man. You know, the world is against you. Don't let him be. Do something with your life. You know what I mean? The more you... Just, come on, man. All right, I'm going to have you just take a seat back, all right? Hang tight.
Jamie, pull. I've never heard anybody say anything bad about Snoop. Can I ask you a question? Sure. Who's a bigger rapper? Most famous of the two, Jay-Z or Snoop Dogg? in your opinion?
Globally,
Around the world, like if Jay-Z and Snoop Dogg was in a mall in Moscow, who would shut the mall down? Like I'm having to go Snoop Dogg, respect that. Biggest rapper in the world. We're not talking about Grammys, because he ain't won one yet. Biggest fucking superstar in the world. That's my big one. Long Beach, West Coast, I wish it motherfucker good. Shit, Snoop. It's fine. Hello. Hello. Yes, it up.